Hello, I'm Alexandria Ferguson. I'm Assistant Creative Director of O&M Partners, and I want to welcome everyone to the Luminex Resources Corp Town Hall webinar. Luminex trades under the symbol LR on the TSXV and under the symbol LUMIF on the OTC. For those of you who are new to these broadcasts, O&M is the link between the investing public and public companies. In past times, these groups may have passed each other like ships in the night, but our digital roadmap enables us to keep pace with tremendous changes in investor demographics and how they receive information. We want this broadcast to answer all of your questions. Questions can be easily chatted in by going to the question panel of the GoToWebinar or by emailing us. For any questions that remain unanswered, we will follow up in a timely manner after the town hall. For those of you who dialed in with your phone, the only way you can hear a pre-recorded introductory presentation is on your computer speakers. If that's not possible, you'll be able to hear the main presentation after 10 minutes, so please stay tuned. Today's introduction comes from our special guest, David Hunter. He's the Chief Macro Strategist at Contrarian Macro Advisors. Mr. Hunter is an investment professional with 25 years of investment management experience and 20 years as a sell-side strategist with strong expertise in macroeconomic analysis and portfolio management. David's strong macro capabilities combined with a contrarian philosophy have allowed him to forecast economic cycles and spot on market trends well ahead of their consensus. He's an accomplished stock picker and value-oriented portfolio manager. So I will turn it over now to David Hunter.
Well, thank you for hosting me today, and I'll be going through a little bit of an overview of the markets and the economy, and then moving right into my outlook for gold. So I think, well, obviously we're in some pretty unprecedented times, and it's leading to some unprecedented responses from the government and from the central banks, and that has long-term implications for both the market and for the metals. But in terms of the economy, I am in a very small camp that says we are, and I was calling for this for years, saying that when we end the cycle, it's going to end in a global bust. So I use the term bust to describe something that's bigger than a recession, steeper and worse than a recession, but not as elongated as a depression. So I think over the course of the next year, we'll be deep in that. I think we are in the bust now, what I call the beginnings of a global deflationary bust that I think will, following a couple quarters of rebound, go into a second phase of the bust that I think will be steeper and deeper than the first phase. So, probably late this year or early next, we'll end this bounce and start heading the other way again. And I think the second phase, you have much more insolvency issues, and the problem, we can talk about the next two quarters as recovery quarters, but it will be very uneven and not supportive of a lot of sectors of the economy. So it makes it tough. It won't feel like a normal recovery, but in the places that are benefiting, it will be pretty steep coming out of the trough. So I think third and fourth quarters are going to be surprisingly good, but statistically at least, but as everybody knows, airlines, hotels, restaurants, etc., are still going to be in really rough shape. So that's my economic outlook for the next year. Beyond that, I do think that the response from the central banks will be massive. We've already seen historically massive response. But an even bigger one will come in the second phase because they'll have to do it. And this will be global, not just the Fed. And that will lead to a very strong industrial recovery from 2022 out to probably the latter part of this decade. It will be the first industrial-led recovery that we've seen since the 1970s. For a lot of people, I was around then, but for a lot of people, they've never seen either an inflation cycle or an industrial-led cycle. It's all been consumer and disinflation since 1982. So we're looking at something that will be very different. It will be spurred on by a lot of monetary and fiscal spending and reshoring of capacity from China, et cetera. But it will be robust, and it will lead to I think, a very sharp inflation cycle. It'll start gradually and then move from there. Just to transition over to the markets, I think we're in the latter stages of a 38-year secular bull market that began in 1982, was driven by disinflation. Inflation came down from 20% down to 0, and ultimately next year, I think we'll see negative inflation, maybe fairly deep negative inflation of 3, 4, 5%. And then the inflation will follow that with a lag of another year or more. That's a secular bull market that is coming to an end. I think it will end in a melt up. So I believe in the next few months you'll see. I've been calling for 42 to 4,500 on the S&P. I think you'll see that this year and probably by this fall. Could happen by the end of this quarter, but we'll be well on our way at least in this quarter. And melt up means it's going to go parabolic. It's going to get even steeper than it's been out of the March trough. And I think again it's very much propped up or propelled by the big money that's been pumped into the system. But there is also a response to that money will lead to some fundamental improvements in certain industries. So I think the market will broaden out, and you will see things like energy start picking up speed here and taking over a little bit of the performance. Industrials maybe a little bit from the tech that's been so the big driver of the rallies thus far. Gold and the miners, I think, do very well in this move into the top, and then where I think the stock market will probably not see the highs we make this year again for at least a decade, maybe two. Gold and the precious metals in general, I think, make major new highs as we move through the next through the decade. So gold, which is currently a little over 1,800, I think it can get to 2,300 in this rally this year, and then I think it gets hit like most assets in the bust. But whereas I think the stock market can drop as much as 80% in the second phase of the bust in a very steep bear market, I'm guessing that gold probably and the miners probably don't correct much more than 30-35%, and gold itself less than that. So and then I believe we'll see $10,000 gold, probably higher than that even, by the end of this decade. And by the way, silver, pretty much same path. I think silver can get to 35 this year. A correction to that might take it back to the mid-20s in the bust. And then I think we'll see silver north of $300 this decade. So there's a big runway still ahead for gold and silver. It's interesting. You had, gold and silver both peak out. Gold in 2011, silver, I can't remember exactly when it was, near there. And then you went through a long consolidation, first a very steep sell-off, and then for the last several years, kind of a long, drawn-out consolidation. And we came out of that. We bottomed in 2015 at 1050. So you were at 1900 on gold back in 2011 at the peak, and bottomed out at 1050 in late 2015. Spent another few years kind of up and down, and then another bottom at 1160, a higher bottom at 1160 in August of 2018. And from there, we've gone in 2 years' time, we've gone up 650 points. So gold's really had, a bull market here for the last couple of years, And I think that just continues here as it starts breaking above some important resistance at old highs, the 1900 area. So there's, I think, a lot of excitement ahead for the metals, and it's been a long period of testing people's patience. There were good periods in there where if you were a trader, you made some money, but for investors and for a lot of gold bugs who thought this would happen way before this, it's been a frustrating period where a lot of them threw in the towel and haven't been back. I think you're beginning to see all that change now. Gold's getting more sponsorship, and as is silver, and I think that's what we're going to see here for the next several months. So that's kind of my outlook for gold in a nutshell. By the way, my inflation call for the inflation cycle is that we'll start from obviously negative inflation in the next year, and at the end of the decade we'll have retraced the entire drop in the 20% level back in 1980. We'll retrace that entire amount and be back there again by the end of the decade. So it'll be a hell of a ride if that's correct, but you can see why the metals might get some real sponsorship in that kind of environment. So thank you for having me, and happy investing.
Thank you for those insightful comments, David. Now I want to turn the call over to Marshall Koval. He's the president and CEO of Luminex Resources. Marshall has 40 years of experience in corporate management, M&A, finance, mineral exploration, mine development, and operations, and has worked on mining projects in over 30 countries. Previously, he was a partner at Ross Beatty's Lumina Capital, a key investment of which includes Ventana Gold, bought by Ike Batista, CEO of Northern Peru Copper, bought by China Minmetals, Jiangxi Copper, VP of Corporate Development at Lumina Copper, bought by First Quantum, and president of Colorado-based Pincock, Allen & Holt, a renowned consulting and engineering firm in the mining and energy space. We also have with us Scott Hicks, the VP of Corporate Development and Communications at Luminex, who will be around for Q&A, but right now I will turn the call over to Marshall.
Thanks a lot. I'd like to welcome everybody today. We're in a really interesting period in the gold market. We just hit the all-time, well, the highest point since September 2011. And what I'd like to talk today about is our Luminex Resources company. We have assets in Ecuador. I want to talk a little bit about why Luminex is such a good investment in this particularly rising gold price environment. Right now, the company has some 5 million ounces of gold in resources, both in indicated and inferred resources on the books of the company. We're trading at about $9 an ounce of gold in the ground. Ecuador right now, our peers are trading at a significant discount to other Western world gold developers, roughly a 44% discount. And as Ecuador continues to emerge as a primary mining destination in Latin America and the world, we think that that'll move up. So the investment thesis is really strong. I think Mr. Hunter's comments about where gold is going, I kind of called gold breaking through 2,000 at the end of this year in early April and March. And it looks like we're on the path to get there. Maybe we'll get to the 2,300, but there's a lot of leverage and torque that Lumina Resources has to the upside of gold. And we also have some copper in the story. And recently, copper has gotten up to $2.90 a pound. So copper's starting to emerge in a better place. So let's get into the story here. Obviously, I'll be making some forward-looking statements. So here's our policy on that. Basically, Luminex Resources, we have 3 key assets. We have 2 world-class partners, and all of this is in Ecuador. Our Condor project, we're the operator of it. As I mentioned, it's got about 5 million ounces of gold. We made a new discovery last year, a high-grade discovery called the Camp Zone, about 1.1 million ounces of gold equivalent. It's about 900,000 ounces of gold at about a 3 gram per ton gold equivalent cutoff grade. We're currently drilling. We're trying to expand the camp zone into some other areas. We're self-funding this, and I'll run you through that as well. And as I mentioned, we have 2 world-class partners, Anglo American and BHP. BHP is advancing our Tarqui project. They have to spend $42 million over 6 years to earn 60%, and they can spend an additional $40 million to take them to 70%. They're planning to drill still this year. Obviously, COVID is affecting a lot of operators, not just in Ecuador, but elsewhere. And then we have Pegasus, which is or Anglo American, which Anglo American is advancing our Pegasus project, sorry. They have to spend $57 million over 7 years for 60%, and they can earn an additional 10% to take us to a construction decision. And they'll be looking at drilling in the second half of this year. And again, basically the COVID situation will dictate part of that. Let's go on now to talk a little bit about the group's history. So I've been with Ross Beatty and the Lumina Group since 2004 through all the Lumina copper companies. You can see the deals we've done here through Anglo Gold or Anfield Gold, which has now been merged into Equinox Gold. I sit on the board of that company. And basically, excluding the Equinox component, we raised $275 million and returned $1.6 billion to shareholders. So we've got a track record. We have the ability to finance. We have the technical team to de-risk and advance these projects. And we're an explorer developer, and that's the Luminex model as well. So let's kind of go over to look at a snapshot of where we sit with stock information. We have a buy rating out of Haywood at $1.80. Right now we're trading at 87 cents Canadian. It's a market cap of about 78 million. Key shareholders are Ross Beatty, owns 19.9% of the company. Ecuadorian Entrepreneurial Group owns about 14.6%. Route One, a fund out of California, has 9.9%. Some other funds about 9.9%, and then management and the board has 6% of the company. On a fully diluted basis, we have 94 million shares, and issued and outstanding, we have about 91 million shares. The difference there is options. We don't have warrants. Our market cap is 77 million. And we just completed a $13 million financing. So as of about March, we had 13.9 million. Our trading range has been between 41 cents and $1.09. And you can see the last 12 months trading on the chart below here. So Ecuador's made substantial progress. If you go back to sort of the 2008 period, there was the cadastral system was shut down and new concessions were not allowed to be filed, and basically there was a punitive fiscal regime and sort of a populist leftist government that had been in place in the Correa presidency that kind of affected this. And subsequently, with oil going down, they had budgeted $100 oil for the economy of the country. When that kind of collapsed several years ago, the same government that shut down the sector, opened it back up. They engaged Wood Mackenzie in 2014. We entered the country in 2013-14 looking for opportunities. We thought things would improve, and they did. So if you kind of look at fast forward to today, through the Correa presidency and the Moreno current president, they both have worked to improve the fiscal and investing regime in Ecuador. They've done several things like eliminate a windfall profit tax, lower the range of royalties that a company would have to pay the government. It used to be 5 to 8%. Now it's 3 to 8%, and that's negotiated once you have a pre-feasibility study for a project. All in all, this improvement in the fiscal regime, VAT refunds were another one, has brought a lot of mining companies into the country. And as the country continues to establish itself as a major mining jurisdiction, projects like Lundin Gold's Fruta del Norte and Tongling Mining's Mirador project, which were both commissioned the last quarter of last year, will do a lot to show how mining, large-scale responsible mining in the country improves. And what you're starting to see through this COVID pandemic is mining has become more and more important, both exploration and development. And you've got most of the major Western copper players and quite a few of the gold players coming into the country. Got BHP, I mentioned earlier, Anglo, Newcrest, a gold copper player, Fortescue, Franco-Nevada, Wheaton Precious Metals, Dundee. All these companies have come in. So Ecuador is a comfortable investing jurisdiction for these companies. And it's probably the last systematically unexplored region in Latin America and probably the world. So let's talk a little bit about the Luminex concessions in Ecuador. We spun Luminex out of Lumina Gold in 2018. And at that time, we were the second largest concession holder in the country with all of our assets, including our Cangrejos project in Lumina Gold. And today you can kind of see where we sit with our various assets. The Pegasus Anglo American deal is in the center of the country, but most of the rest of our assets are centered around the Condor project, assets within Luminex. And then our Cangrejos project is over here on the west near Machala. So the Tarqui asset of BHP is in green here. The Mirador mine and Fruta del Norte are in gray boxes here. These blue boxes are some of the other concessions we have, both gold and copper concessions, Kimi, Escondidas, Santa Elena, La Canela, Tres Picachos, Orquídeas, and Cascas. So let me kind of flip you over to this corridor that we're in. So our Tarqui project is up here to the north. That's BHP's operating it. Kimi is another copper porphyry. Tarqui is a copper porphyry. And they're in trend with the Mirador mine, which is generally these porphyry copper deposits occur in clusters. So we think this clustered area with Tarqui, Kimi, and Mirador is pretty significant. And then if you go back to Fruta del Norte is on trend. South of that, it's about 30 kilometers from our Condor project. Fruta's in production. You can see their land package abuts our property to the north. All the yellow is our Condor assets. And then they have a JV with Newcrest, these green areas to the south of us. And to the west, you can see it's basically the most heavily explored corridor within Ecuador. So let me kind of come in and focus a little bit more about the Condor project itself. This northern area where you see the yellow diamonds, that's our northern epithermal area. That's where we're concentrating now with our exploration. That's where the camp zone is and the current drilling that we're doing. And you can see the Santa Barbara deposit is down here. That's a gold copper porphyry in the southern part of our concession packages. There's been over $40 million spent on exploration by previous owners and over 120,000 meters of drilling. Luminex, we own 90% of the project, while 10% is owned by the Ecuadorian Armed Forces Pension Fund. So as I mentioned earlier, we have resources at the Condor project. These red stars in the northern area, that's the northern epithermal area. The porphyry area with gold copper is Santa Barbara here. And this table on the left shows all the different grades and resources that are reported, all of these red stars. If you see look at the green stars, Prometedor, Elito, these are Tres Cerritos. These are exploration areas that are known on the project. The most interesting one in this northern area is Prometedor, and we'll talk a little bit more about that in a second. So the camp zone resource we just put out this year basically is 11.9 million tons of 2.26 gold. It's quite a bit higher grade than the open pit targets. It's likely an underground target, and it's roughly 900,000 ounces of gold, but also has silver, copper, lead, zinc credits as well. Basically, if you look down here on this chart below, we did the base case at a 1.5 gram per ton gold equivalent cutoff grade. That gives you basically the 1.12 million ounces of gold equivalent ounces. And what you can see is as you raise that cutoff grade, the deposit still holds together. If you go up to a 2 gram cutoff grade, you lose about a quarter of the resources. So basically, we're continuing to drill and look at this area. This is a very initial resource, and we did that so we could kind of scope the nature of the project and focus exploration going forward. So this is a cross section with some of the intercepts, and basically we've tested about 500 meters along strike of the camp zone and about 600 meters of depth. We've drilled this on 75 meter spacing. That gives us the inferred resource. And as you can see, there's quite a few significant gold intercepts here. A lot of true thickness of sort of, there's one right here, 30 meters, 30.8 meters of 4.77 grams per ton. So highly prospective area, more work to do here. The metallurgical test work is underway. It looks really positive, plus 90% type recoveries. So we're really excited about this camp zone discovery. Here's some of the core from it. You can see some of the grades here. You get this massive marcasite pyrite sphalerite that will run as high as 52 grams per ton gold. And then you get these rhodochrosite vein breccias that'll run 17, 18 grams per ton gold. So this is all associated with breccias near a rhyolite dike. And even the rhyolite dike has been broken up and mineralized. And you can see that in this photo right here. That'll run sort of 4 grams per ton. On the right here, you can see the structure in cross section. It's a zone related to this rhyolite intrusion, and both the hanging wall to the right and the footwall and the zones in between are mineralized. And it's early days on understanding how large this is and testing the strike length and depth. So if we look at this figure here, we can see the camp zone up here on the left, and this trend with these dashed purple lines, it tends towards Soledad Baja and the Soledad deposit, which is one of the, along with Los Cuyes to the north and Soledad, that's where the majority of the resources previous to the camp zone sat. And what we're doing now is we're testing along, and we have 2 drills on site. One is active right now. We've been able to drill through COVID after we put protocols in place. And basically we're testing the strike extension of the camp zone into the Soledad area. And then on the other side of the camp zone to the very bottom right here is the Prometedor area. So we're looking at that whole structural trend. This gives you a little bit better view of the Prometedor target. And you can see this is an open pit target with quite a few channel samples and rock outcrops above a gram, gram and a half materials. So this whole gold mineralization trend here is this northern epithermal area that we're testing. And we think there's quite a few more ounces of gold that we'll be able to discover. And that's kind of where we're focusing and trying to understand this from an exploration perspective before we move towards engineering and doing economic studies. We still have a lot of exploration potential to explore. So let me switch over to the Anglo American earn-ins. As I mentioned, the amount they need to spend, I talked about that earlier. They spent about $10 million to date. They're focused primarily in this Pegasus A block, but also working some in Pegasus B. They've done quite a bit of geologic work, geophysics work, and they've identified 8 potential porphyry targets within the land package. And what Anglo is looking for is a district scale porphyry copper plays. And what they've done is they've sort of looked at all these, ground truthed them, done a lot of geophysics work. And the most prospective area that they intend to drill first is this Medusa project. So the magnetics and resistivity surveys you can see here, this was all done with ZTEM airborne survey, and they've defined a real classic porphyry target, porphyry copper target here with the pink and magenta areas being the drill target area. And the resistivity kind of confirms this. Pyrite halo, the potential copper zone, a real classic signature of a porphyry copper deposit. BHP, on the other hand, is focused on a specific porphyry area where there's a couple potential deposits. It's about a 5,000 hectare land package, whereas the Anglo American is about 65,000 hectares. And basically, there's a discovery zone. We discovered this deposit. It wasn't known previously prior to BHP coming in and joint venturing with us. The discovery zone here is where we focus. This is some of the highest grade copper we've seen on any of our projects. A lot of the outcrop sampling is plus 1% copper. You can kind of see a bit of oxide zone here, but a real high potential porphyry system on trend with Mirador. So we're really excited about that. And, you know, hopefully with COVID, both these companies will be drilling this year. That's been their plan, but we'll have to see how that develops. We are also managing an early stage exploration project called Cascas ourselves. So our focus with our funds in Luminex is primarily the Condor project in Cascas. You can see here there's about a 5 kilometer by 2.5 kilometer wide copper anomaly with a coincident gold anomaly. There was some illegal gold mining in some of the drainages in the area. We've done soil work and we know there's quite a good gold anomaly here. So we'll be focused on hopefully drilling this gold anomaly. We're doing work in the area as we speak. So when we look at Luminex, reasons to invest, I mean, you've got a management team that has really been there, done this, capable of raising money, de-risking these projects, adding value, and moving them towards development. We're drilling and moving towards a PEA. This camp zone discovery will be the focus of it, along with Los Cuyes and Soledad deposits. As I mentioned before, there's about 1.6 million ounces of indicated and 3.6 million ounces of inferred on the project, and about half of that is in this northern area. We have earn-in agreements with 2 tier 1 copper companies, Anglo and BHP. We currently hold an additional 25,000 hectares of land beyond these earn-ins in the Condor project, where we plan to drill the Cascas project that I mentioned to you earlier. And as I said, we're highly aligned management team with 26% ownership, so we're aligned with shareholders. And you know, as I mentioned earlier, there's quite a disconnect with all of our peers in Ecuador as far as PNAV multiples. Right now, Luminex is about 0.41 times PNAV, whereas the rest of the Ecuadorian developers are 0.35. But if you look at the Western developers, they're trading at 0.63. So we think there's a good investment thesis here. And I appreciate your time today. And so I'll turn it back over to O&M for any questions. And also, I'd like to encourage everybody to follow us on LinkedIn and Twitter. And then also you can go to our website and sign up for emails and get up to the minute news from us. Thank you.
Thanks, Marshall. We'll start today's Q&A portion with Chesley Morton. Chesley, if you could unmute yourself.
Okay, there we go. First of all, Marshall, great presentation, inspiring. There was a article by one of the major outlets, I think last night, that talked about the money, $1 billion and more, that's been going into the mining sector lately by major players. And although the article mentioned that a lot of it was in the first tier names, it also said juniors were getting their share. To what extent has those new funds available kind of changed your outlook or your prospects in any way?
Well, I think what we're starting to see, and Scott's on the line, Scott Hicks, our VP of Corporate Development, so he can chime in after I'm done here. But we've seen that move down the food chain. So I mentioned earlier, I'm on the board of Equinox Gold. So you sort of saw the first movers, the Newmonts and the Barracks. Then you saw the Franco-Nevada, the royalty companies, Wheaton Precious Metals, Royal Gold. Those were the first places that a lot of the investors went. And then they went to the mid-tiers like the Equinox. So a lot of the producers have moved up 100% plus over, since last December, let's say. And you're starting to see the money move down into the junior space. We've moved up. Prior to this last financing, we did at 70 cents a share. We did a financing last December, and we were trading around 50 in the low 50s at that time. So we've seen somewhat of a move up, but we don't think that a lot of the generalists that are moving in the space that are starting to look at the juniors, they're still deploying more money, and I think we'll see junior developers and sort of advanced exploration companies like Luminex start to get more attention. So I think we're still in the early phases, and that's part of why I think there's the potential investment thesis here for an upside in our share price. Scott, do you have anything to add there?
No, I agree. I mean, the developers have really caught on in the last month, obviously here, and we've seen, an emphasis on North American names versus say South America or in Africa, but I think it's just a matter of time before people continue to venture out and watch all those names play catch up.
Yes, and I think that the move by the larger investors is keeping with the thesis that we heard earlier at the top of this meeting. So best wishes to you on that. Thank you.
Thank you, Chesley.
Thanks, Chesley. We're going to turn now to Doug Lau. Doug, if you could unmute yourself and ask your question.
Hopefully I've successfully unmuted. How are you, Marshall?
I'm good, Doug.
Luminex, Lumina, however you wish to describe it, happy camper. So two quick questions. Santa Barbara, and I guess you called it Northern, are they close enough to one project ultimately?
Yeah, I mean, we've looked at that. You have the potential, and again, we want to understand the northern area first to understand if it would go towards development and engineering, if you would have a plant in the north and then a plant at Santa Barbara in the south, or if you could have a central plant. But obviously there'd be shared infrastructure that would benefit both of the projects. So that there is some potential co-development sort of synergy between those deposits. And from a metallurgical perspective, you could handle both types of mineralization through a common plant. We did a little bit of work looking at that, but again, we're still a ways away from defining a development project that we would start the engineering, doing the PEA. We're doing the initial steps with the resource estimate, doing our metallurgy and trying to understand that. So we're, obviously that's the direction we want to head, is to define a scope of PEA and move forward with engineering towards a development project. And we would take all that into account, Doug. That's a good question.
Because it looked like they were almost 5 million ounces or just over between them.
Yeah, they are. They are.
Big fellas like that.
Yep.
My other comment is, are all of your projects in separate corporations, like I think they are? So you can
they are.
Get bigger?
Yeah. So the way we've structured it is, and this is kind of back to the Lumina Copper days, where we have each individual company in a silo, and we can do some financial engineering and spin those assets out as there's interest. So for instance, let's say BHP makes a major discovery. We can spin that asset out into its own entity. The same with the Anglo, and the same for the other assets we have, Cascas and the others. So yes.
Great. And I assume that in Ecuador, you can do that, unlike you can do in Canada, where the Canadians come after you later for the taxes if you make any money.
Well, I mean, you got tax in all regimes, but it would be if we were to do any of that, it would be at the topco in Canada. That's the way that it's structured, from the topco down into Ecuador.
Okay, but you don't run into a Canadian tax problem for sending away the spinoff the way if you just own the project outright you would.
Scott, you're probably better suited to address that than I am.
No, and that was part of the reason, actually, when we went back to the Luminex days, why we did the spin out the way we did, was getting Lumina Gold ready for an eventual sale and not wanting, you know, the companies to be subject to an asset capital gains tax in Ecuador. So it's part of the reason why we structured the topco in Canada that way with the spin out.
Great. Thank you very much. Fascinating as always.
Thanks, Doug.
Thanks, Doug. We're going to turn now to Heinz Thoma. Heinz, please unmute yourself and ask any questions you might have. Okay, we're going to turn now to Martin DeBovis. Martin, questions today? Seems we're having a little bit of microphone trouble. Rolf Wagner. Rolf, are you online with us? If you could unmute yourself and ask your question. Okay, Rolf, you are unmuted. Let's turn to Scott. Scott, do we have any questions from the audience that have been chatted in?
Yeah, one moment. Let me pull those up.
Scott, while you're doing that, I just want to point out one thing that's kind of related to the earlier question about movement down into the junior space. And you can see this last 12-month trading volume. So you can really see a pickup in trading volume from about May 20th in the Luminex shares to currently. And, you know, I think that's part of the reflection of some of these different investors coming into the junior space based on volume of trading here. And you can also see the share appreciation during that period from May 20 up until currently.
Great, thank you. First, I would just like to say to Heinz or Martin or Rolf, if you are having trouble, you can always chat your questions into the chat or the question panel. We'll try back to you though in a minute. Okay, first question from the audience. In the Lumina Copper story, you had a royalty company spun out as well as and sold to Franco-Nevada. Is that a potential plan here as well? Do your projects have existing royalties on them?
No, there's no existing royalties on the projects, the BHP or the Anglo American. Basically, any of the royalties we have are government mandated royalties, sort of the 3 to 8% range that I mentioned in the presentation. Now, as far as whether we would hold on to any royalties, that hasn't been our initial plan. I think if there are deals to be had, we would look at that. And that's kind of how that evolved within Lumina Copper. We had a series of royalties when we sold assets that we hung on to, and we bundled them up into a private company. And that's what Franco-Nevada acquired. I believe it was for $66 million US. And those were primarily copper royalties.
Great, thank you. Next question. Are there any upcoming elections in Ecuador that would impact mining within the jurisdiction?
Yeah, so there's the election for president is the first round is in February. And basically what we're looking at is most of the candidates that we think will run have all been pretty much pro-mining, responsible mining. It's become more and more important within the economy. So you've got a center-right candidates, and Moreno, the current party, will probably have somebody run, and they have been pro-mining in the country. So we expect that the election won't disrupt kind of the mining sector within the country going forward.
Thank you. The next question, what is your exact roadmap for the PEA PFS?
So the PFS is kind of not on the table at this point. So the PEA, basically what we're looking at, I mentioned that we're still trying to understand the nature of the camp zone and the extension of it towards Soledad Baja. We're looking at the metallurgical test work we've done. We're looking at infrastructure and some of those sort of aspects, but we're not ready to scope a project yet and move that project to a PEA, but we're working towards that. So I think as we move through the rest of this year, we'll have a better idea of where we're headed towards the end of the year once we complete some of this extension of the camp zone drilling that we're doing now.
Thank you. This last question, I'll let you see if this is something you answer on the air or not. Hi, Marshall. My plan is to move my Lumina buyout funds into Luminex. Do you have any update on that transaction? I also wanted to point out to others how fortunate we are not to be diluted by warrants. Thank you.
Yeah, I like the warrant comment. I'll start there. That's been the kind of philosophy of the group, and a lot of that has to do with our basic ability to finance, our mentality that management, that includes Ross and the management group and the board of directors. We have a real strong anti-dilutive mentality. We put our own money into each one of these financings that we do. We try to, as best we can across the group, maintain a pro rata share. Ross certainly does that. He, last year he upped his ownership in both Lumina Gold and Luminex up to 19.9% in both companies. So, we're really aligned with shareholders in that regard. And and we have the luxury of not having to use warrants to do our financings. We generally do sort of a 6 to 8% discount to market in our financing. So we're real fortunate as a group in that regard. And I forgot the first part of the question. Sorry about that.
No, it's about the transaction, Lumina buyout funds. Any update on that transaction? This investor wants to move Lumina buyout funds into Luminex.
Oh yeah. Well, so I mean, we just on Lumina Gold, we just basically published our PEA. The 43-101 will be out within next week. I think it may be due on Friday this week. And we announced the results of that already. And obviously we've come out as explorer developer, and we want to exit at some point. Our largest shareholder came out to the market and said that he'd have an interest in seeing that happen this year. But right now with the situation with COVID and such, we're continuing to do work on Lumina Gold and move down the permitting pathway. So that's about the best that I could tell you right now. I can't give investment advice on something like that.
Understood. Thank you. Alexandria?
Okay, let's try Martin DeBovis again. Martin,
Yes,
can you hear us
sorry,
now?
the microphone was muted. Gil, when do you expect to be in production? And the second question, is there much of an infrastructure where you are going to be producing, or will you have to do a lot of work?
No, that's a good question. So we benefit in the regional sense. Zamora Chinchipe provinces where both Mirador and Fruta del Norte have been developed. So both of those companies have improved some of the infrastructure in the area. But basically, right now, we're still not at the point where we're looking at advancing the project in the engineering. So the first step would be the PEA that I mentioned earlier, and that would look at the scenarios. Do we develop the northern epithermal area first? Do we combine that with the Santa Barbara gold copper porphyry? And we would look at all that. But we have good access with regional highways in the area. There's power to site, there's water. So a lot of those aspects of project development are real positive that bode well for the project.
Will there be local population that you could train and use in production?
Yeah, and we have, we're primarily within 2 cantons, which would be like counties, I guess, in North America. And we have quite a few people employed in those cantons that work at the project. We've worked well, particularly during this COVID pandemic. We've worked really well with the communities. We've done a lot of support in the area. We're one of the few tax bases these communities have. We've worked with them for protective gear, providing food and that sort of stuff. So we do have populations in the area, and we do have current employees. And you know, when you look at a lot of these isolated areas in the country, employment is in education and health are kind of the key things that the communities are looking for besides respect, you know, and I would say respect is the #1 thing. And, you know, we go out of our way to work really well with these communities. So, yeah, the communities, if this project were to be put into production, would be partners in moving forward and supporting us, and we would have employment and training and that sort of thing.
Thank you very much. Very, very encouraging, very interesting in this current environment.
Yeah.
Thank you.
Let me add one more thing on that. You know, when the pandemic just first hit in early March, we, even though the government had deemed mining an essential industry and wanted us to continue, we stopped operations to get our drilling operations, to get our COVID protocols in place and to protect our employees, you know, our project and our communities. And we were able to go back into operation in April, and we've been able to continue since then without any outbreaks in our camp. And like I say, we've worked with the communities to help support them as well. So that's been a really good approach that we've taken there, and it's allowed us to successfully continue to operate.
Okay.
Thanks, Martin and Marshall, for that answer. We'll turn now to Victor Zhao. Victor, do you have any questions today? And could you unmute yourself to ask your question?
Yeah. So when the partner, the Anglo American and the Rio Tinto, I guess it's Rio Tinto, will drill the start drilling.
When will they start drilling? Is that what
Yes.
you asked? Yeah.
Yes.
So, I mean, both companies, it's BHP at our Tarqui project and Anglo American at our Pegasus project. Both companies had plans to drill this year. And obviously, you know, with COVID situation, it makes it a little bit more logistically, and different companies have their own precautions and safety protocols. So, you know, we hope that they still drill this year. I suppose if that doesn't happen, we would look for them to try to get back at it early next year as things settle down with the pandemic.
Okay, thank you.
Thanks, Victor. I'll turn it now back to Scott Edmonds to see if we had any final questions chatted in.
Yeah, I have one more that just came in. What is the desired valuation of ounces in the ground for gold? And then current M&A activity has been at $80 Canadian, ?
There you go, Scott, that's yours.
Thanks. I mean, I think if you look across kind of the peers that we would see in North America, you know, they're trading at, call it $70 an ounce. And then, you know, I think where both Lumina Gold and Luminex Resources are trading, you know, in and around $9 or $10 an ounce in Ecuador. I mean, we think about things more on an NPV basis. I appreciate there's not a study yet on Luminex, but you know, Haywood did a pretty good job of putting together what an illustrative mine plan could look like in their research report, and came up, you know, with the $1.80 price target based on that at Condor. So I mean, from a valuation perspective, we think that Condor more than supports our market cap, and you're getting the two earnings with the copper majors for free, and that's how we're thinking about it.
Yeah, in addition, Scott, you got Cascas and the other concessions that we hold as well.
Yeah, for sure.
Great, thank you. Well, that's the questions from the audience. I want to thank everyone for writing in their questions. They were really good today. And I'll turn it back over to you, Alexandria.
Great. Well, I want to thank everyone for joining us and for being a part of the Q&A discussion, and I'll turn it to Marshall for final closing remarks.
So basically, we're in a really good solid gold environment. We're in a country in Ecuador that's continued to improve and become more of an investor destination. We're a proven management team and mining group with a lot of resources in country, and we're capable of financing and delivering values. So I think it's a compelling share price exercise here. If you look at where we're trading, and you know, we talked about the metrics of $9 an ounce of gold in the ground, and more interest in the junior space. So we think it's a compelling investment proposition, and hopefully you'll look hard at it and see this, and we'll continue to perform, and hopefully we'll see a move up towards the Haywood Securities, the $1.80 buy share price. So that's the investment thesis, and I want to thank everybody for your time today.
Thank you all for joining us, and I hope everyone has a wonderful rest of their evening.